What if the global financial system broke tomorrow? Not in theory, but in real life. What if the US dollar collapsed? China suddenly devalued the yuan, global banks froze withdrawals, and the world entered a domino-style debt crisis. This isn't fiction. These are real scenarios economists fear, and today we explore exactly how they could unfold. In the modern world, money moves at the speed of light. One panic, one policy mistake, one geopolitical shock, and the entire global economy can flip overnight. This video breaks down 4 major collapse scenarios and what each one would actually look like today. The US dollar isn't just America's currency, it's the world's oxygen. 60% of global reserves, 80% of trade, and nearly all commodities rely on it. So, what happens if the dollar collapses? First, global markets go silent. Every stock exchange on Earth halts trading within minutes. Oil, gold, wheat, shipping, everything freezes. Because no one knows what anything is worth anymore. Inside the US, prices explode. A loaf of bread that costs $3 becomes $6 by the afternoon. Imported goods vanish within days, from smartphones to basic medicines. Because suppliers demand payment in euros or yuan, banks impose withdrawal limits. Foreign investors dump US assets. The Federal Reserve attempts emergency stabilization, capital controls, interest rate shocks, emergency liquidity injections, but the real damage comes from panic. Countries holding trillions in US debt, like Japan, China, and the Gulf states, start selling. That selling makes the dollar fall even faster. Confidence breaks, and once global trust disappears, the dollar cannot recover easily. The world enters a new financial dark age. Not because America fell, but because the system built around America shattered. Now imagine a different shock. China announces a sudden 30% devaluation of the yuan. Why would they do this? To rescue exports, protect banks, or respond to a debt time bomb inside their property sector? But the impact? Catastrophic. Global manufacturing prices plunge. Every country faces an instant flood of cheaper Chinese goods. Local factories collapse. Layoffs rise everywhere, from Vietnam to Mexico to Europe. Meanwhile, China's middle class watches their savings shrink overnight. Imported goods like cars, iPhones, and energy become unaffordable. A wave of domestic anger begins. Capital flees the country. Beijing enforces strict controls on bank transfers and foreign buying. Global markets react violently. Commodity prices fall. Asian markets crash. Multinational companies lose billions as their China-based operations become unstable. And here's the dangerous part. A yuan devaluation would force other countries to devalue too, triggering a modern version of the 1930s currency wars. In a hyper-connected global economy, that kind of chain reaction could spiral into a worldwide recession. Next scenario, the nightmare of a global banking freeze. Think of 2008, but much faster and far worse. Imagine a major international bank collapses, causing immediate panic. Within hours, bank apps stop working. ATMs run out of cash. Online transfers get suspended. This isn't just inconvenient. This is civilization stopping. Without banks operating, companies cannot pay salaries. Supply chains halt. Credit cards stop working. Businesses can't buy inventory. People rush to grocery stores, causing instant shortages. Governments announce emergency bank holidays to calm the public. Central banks issue combined rescue packages, but trust is gone. People convert savings into gold, crypto, and foreign cash. Social unrest rises, Because when you freeze banking in the digital age, life itself freezes. A global bank shutdown wouldn't be a financial crisis, it would be a shutdown of the modern world. The final scenario, a worldwide debt chain reaction. Today, countries are drowning in debt, the highest levels in human history. All it takes is one major default to set off a chain event. Imagine a large emerging economy announces it can't pay its loans. Bond markets panic. Investors flee developing nations. Interest rates skyrocket. Nations from Africa to South America to Asia start missing payments. What happens next is brutal. Currencies crash, import prices explode. Governments cut subsidies, protests break out, economies shrink, more defaults follow. This is how a regional debt problem becomes a global meltdown. International institutions scramble to stabilize the system. But, unlike previous eras, today's debt is too large, too interconnected, and too vulnerable. One major default, and the world could fall into a decade of financial winter. So what do these scenarios teach us? That the modern global economy is deeply interconnected and deeply fragile. One collapse does not stay in one nation. One mistake becomes everyone's problem. The real danger isn't just debt or inflation or banks. The real danger is speed. Because in today's world, panic moves faster than governments, faster than regulators, faster than truth. And in a system built entirely on confidence, once confidence breaks, everything breaks with it. Thanks for watching. If you found this breakdown insightful, subscribe for more deep dives into the systems that shape our world.